In the world of trading, there are profits. And then there are moments that rewrite financial history. Moments so bold, so perfectly timed, that they shake entire governments and redefine what's possible in a single trading day. This is the story of a man who made $1 billion in just 24 hours, not by luck, not by rumor, but by understanding the invisible forces that control global markets. His name is George Soros. And on September 16th, 1992, a day now known as Black Wednesday, he didn't just trade the market, he broke it. Stay until the end of this video, because the deeper you understand how Soros pulled off this once-in-a-lifetime move, the more you'll see how every market, even today, still moves by the same principles. Before he became the man who broke the Bank of England, George Soros was far from wealthy. He was born Georgi Schwartz in Budapest, Hungary, in 1930, a time when the world was on the brink of chaos. As a teenager, he survived the Nazi occupation, using falsified papers that hid his Jewish identity. He watched entire systems collapse, economies, empires, currencies, and it shaped how he would one day see financial markets, as reflections of human fear and greed. After the war, Soros fled to England in 1947, with almost nothing. He studied at the London School of Economics, where he learned about philosophy, money, and a simple truth that stuck with him forever: that markets aren't rational. They move because people believe something, not because that belief is necessarily true. That idea became the foundation for what he later called reflexivity, a theory that says when traders believe prices will rise, their actions make it rise, and when they panic, they cause the fall. That single insight would one day make him billions. Soros began his financial career with just $12,000. Through the 1950s and 60s, he worked as a trader and analyst in New York, quietly building experience in international arbitrage, exploiting small inefficiencies between markets. By 1973, he launched his own hedge fund, the Quantum Fund, with $12 million under management. And over the next 2 decades, that fund would generate an average annual return of over 30%, beating every major index on Earth. But it was in the early 1990s that Soros's deep understanding of psychology, economics, and timing would collide, creating one of the boldest trades in history. In 1990, the United Kingdom joined the European Exchange Rate Mechanism, or ERM. This system was designed to keep European currencies stable before the creation of the euro. The British pound was pegged to the Deutsche Mark, Germany's strong and stable currency. But there was a problem. The UK economy was struggling. Inflation was high, unemployment was rising, and interest rates were crushing businesses and homeowners. Despite this, the government kept defending the pound's high value to maintain the ERM agreement. Soros watched, he studied, and he saw what no one else dared to say out loud. The British pound was overvalued, and no central bank in the world could hold it up forever. September 16th, 1992, the day that would go down in history. Soros, through his Quantum Fund, began borrowing billions of pounds from British banks. But instead of holding them, he immediately sold them for German marks, which he believed would remain strong. This move was pure confidence or madness, depending on who you asked. The UK government tried to fight back. They spent billions from their reserves to buy back pounds and raise interest rates, even up to 15% in a single day, trying to make holding the pound more attractive. But Soros's position was too massive. Billions were flooding the market, selling pounds faster than the government could react. By evening, the inevitable happened. The UK withdrew from the ERM, admitting defeat. And in that single moment, the pound collapsed, just as Soros predicted. He then bought back the same pounds he had borrowed, now at a much lower price, and pocketed the difference. Profit, around $1 billion in just 24 hours. His fund made over $2 billion total from the entire position. The UK Treasury lost billions trying to defend their currency, and the world gave Soros a new name: the man who broke the Bank of England. That single trade didn't just make Soros rich, it made him a legend. It proved that even governments can be wrong, and that one trader, armed with conviction, timing, and strategy, could move global markets. But Soros's story didn't stop there. He would go on to manage billions, predict major market shifts, and donate more than $32 billion through his open society foundations, supporting education, democracy, and human rights. He also faced failures, like the $600 million loss in 1994, betting on the Japanese yen. But even then, he recovered fast, adapting his strategy instead of giving up. something every trader can learn from. In the years that followed, he became a global symbol, to some, a visionary, to others, a controversial figure. But one thing is undeniable. George Soros understood how belief shapes markets, and he used that truth to make history. In trading, legends aren't made from luck. They're made from understanding, from seeing what others can't, and daring to act when the entire world says you're wrong. George Soros didn't just predict a move, he understood the system better than the system understood itself. That's what made him a billionaire. And that's the deeper truth behind every market, including the one you're trading today. If you enjoyed this story and want to see more real-life trader stories, from billion-dollar wins to unbelievable losses, make sure you subscribe to the channel, because the next story might just change the way you see the markets forever.